Folks, welcome to Sunday Night Futures Live. This is Bob Desmond, and what we're going to talk about tonight, a lot. We're going to be talking about the opening price action of the futures up market. We're going to be talking about some headlines coming out this week, economic data, why we might have a peak in inflation, why we might not have a peak in inflation. We're just going to take a look at some headlines, take a look at people's opinions, balance it out, draw our own conclusions. We're going to do stock chart requests. We're going to talk about our trade of the week coming up, which is Amazon. I'm going to teach you how we do a ratio strangle. So stick around, a lot to go over. So the futures action is opened up. I'm going to share my screen, let people populate in here. Okay, there we have it. Let's go to comments. Jeff. Hey, Jeff. Welcome. Welcome. We only have a few people on so far, so I'm going to take a little bit slow, Hope everybody had an awesome weekend. Today is the 30th. That means only one day to go in Sober October. I usually don't drink during the week, so few days left to go, but we've completed Sober October, feeling really, really good, and probably a couple of pounds heavier, which is different than usual because I'm on crutches still. A couple more weeks left on these things, so I'm eating Halloween candy. No booze, but eating Halloween candy. So we have the futures market that is opened up, people populating in here. Happy Halloween to everyone. Trader Isaac, happy Halloween, my friend. Tom Lou, hello to you. Okay, so we have the E-minis opened up. We are down, gapping down. No great shock here. Let's face it, folks. Let's put things into context. Last week was a pretty huge week. We were bullish going into the trading week. I pointed out about 2 weeks ago, as a matter of fact, on best stock charts, October the 15th, I talked about why you needed to get bullish on the market. We followed up with it last Sunday night. We talked about put-call ratio, sentiment, very, very bearish, get ready for a rally. We also talked about seasonality. That is all playing out this week. So what's really bullish about the price action that we saw on Friday was that you had Apple that came out with great revenues, good earnings, but their growth-driving business sectors, their their services sector, their iPhone business slowing down. So not a great number. I don't think it was a reason for Apple to rally, what, $10, $11 on Friday, but it did. Amazon gapped down, and it did close off of its lows. So not a horrible showing. And for the markets to shrug off that type of horrible earnings data coming out of Amazon, that's a tell. That's a tell. That means that bad news was built into the market and traders were ready to take the market up higher. We can have our own opinions, but you can't ignore the decision by the market. And if you do so at your own peril. So let's get to it. Let's talk about the S&P E-minis, which is what we're looking at now. This is a 15-minute chart. Again, we have a gap down. We're down about 0.15%. Arena of Idea Racing, like the name. Longtime viewer, thank you for being here. Whenever I have time to see your content, always enjoy your commentary on markets. Hope you're getting better, Bob. Thank you very much. I appreciate that. Thank you. You're a gentleman. So the price action continues to weaken up here a little bit. Let's face it. It's early. A. B. We had a very strong close on Friday, so I can't draw a conclusion here. What I'm going to do is I'm going to take my crayon out, draw my alert, and say, okay, I want to know if and when this market moves up to new higher highs. Now, there are certain events. We're going to go to those events in a moment. There are events of as to why the S&P 500 might rally or may pull back this coming week. So again, we're not drawing conclusions here. My bias is to the long side. Seasonality, sentiment still bearish, and people are climbing a wall of worry. And 3, the market's reaction to Amazon earnings. I can't ignore that. We need to say it's game on to the long side, at least for now. Do I think that we've seen a top? No. Excuse me. Do I think I've seen All right. Rewind 10 seconds. Do I think that we've seen a bottom? No. I'll go to the chart of that in a moment. I have my keyboard completely on a tilt here. All right. So our alert is set. We're good to go. Let's take a look at the NASDAQ 100. We'll stick with equities here. NASDAQ 100 down about a 1/4 percentage point, gapping down as well. But again, folks, we need to put things into perspective. This was a significant move up higher, straight shot. Friday was what you call a no downtick day, right? It was no downtick. It was just pure straight up out of the gate. Russell 2000 gapping down. We've already filled the gap. The Russell behaved really, really well last week, along with Dow Jones. Not so much the triple Qs. The Dow Jones even outperformed the S&P 500. So Russell down, less worse than the S&Ps. Let's take a look at the Dow. The Dow stocks really moved last week, folks. And I mentioned this on Thursday night. Watch out for the Dow stocks. You're probably going to see sector rotation into the Dow names because they pay dividends and they're safe haven. Where are my Dows? I had them up here. What happened? Here we go. All right, so the Dow gapping down about spot 1-2%. So they're doing less worse than the other averages. So Dow still looking pretty darn good. Let's take a look at the comments because I must say hello to Franklin. Good evening to you, my friend. Hope we are not looking forward to a scary market. Nah, we may get a pause. We have a lot of economic data coming out this week, economic data that can't be ignored. So we may lighten up a little bit on Monday, Tuesday, going into Wednesday. So I think that we're going to be, I think you're going to see volatility balance out, maybe even drift higher a little bit. Because we do have certain announcements coming out this week that everybody's eyeballing. We'll go to those in a moment. Let's take a look at the dollar. The dollar, which broke down last week, is at current moving up higher relative to the close. I can't give you a percentage change yet. This will update in about an hour or so. So the dollar moving up higher, net on a weekly chart. You take a look at the dollar on a weekly chart. It is not looking good. Big breakdown last week. We have support down here at around 109, spot 38 on the Dixie. Sticking with the Dixie currency trades, the second largest component of the dollar versus the dollar in that Dixie basket is the euro. The euro, we spoke about this several weeks ago, that the euro on a weekly chart had stopped going down. I drew a chart, and maybe I'll show you if I remember it later on. I drew a chart showing that the euro RSI was about to break out. It was in a very, very tight wedge formation. It broke out 1 or 2 weeks ago, and now we have follow through on price. So the euro moving up higher. The Japanese yen. This was an oversold trade, and it was due for a bounce. We got the bounce. We have stopped going down on a weekly time frame. We're down at current relative to the dollar. I believe that this is last week's price action. No, this is actually this week's price action, this weekly candlestick here. So this is up to date. So at current, we have put in the low of October the 17th. This is dollar bearish. Now, sticking with commodities now, commodities which trade inversely of the US dollar, gold, first and foremost. I do not like gold. Gold had a bad week last week. Yeah, look at this. Look at the open here. I don't know why it's showing up. Oh, it must have opened down and filled the gap. Yeah. So they gapped it down. It's now above its opening price. I don't like gold here. I'm long of gold. I'm long of the gold mining stocks, but we don't speak our book. That's not what you're here for me to blow hot air up. You know what? I don't like the weekly chart of gold. It put in a bearish reversal bar last week on a weak US dollar, no less. That ticked me off. Why did that happen? It's because you have a risk-on environment now where people are moving into other equities. So gold is not as attractive. Moving on to silver. Silver, not looking good here. We're down on the session. It looks as though we may pull back further, especially in light of the rising US dollar. That's just the way it is. The irony of trading gold and silver is that when the dollar goes up, gold and silver go down. When the dollar goes down, silver and gold may go up. Go figure. Let's take a look at, let's stick with commodities. I have an article we're going to go over in a moment. Wheat prices, horrible harvest of wheat this year. And this is only a 15-minute chart. We don't want to draw conclusions from a 15-minute chart when we're looking to put on a longer-term swing trade. But on an opening basis, it's a good open here. What we want to do when we're trading commodities, we want to take a look at the weekly chart. And the best that can be said for wheat, I believe this is last week's price. Yes, this is not this week's price action on a weekly time frame. It is last week's. I think that what we're doing here is that we're putting in a higher low. When do you go buying wheat on a breakout above this upper band of resistance? Until then, it's all conversation. Horrible wheat crop this banner year next year. We have the Russians poo-pooing the Ukrainian export deal. That'll drive up the price of wheat. It's all BS. It's all BS. You look at the price. Don't look at the headlines. Look at the price. And the price will tell you which way it's going to go. At current, all the rhetoric that's out there, horrible harvest, Ukraine offline, the Russians pulling back on Ukraine export deal because there was a raid on their Black Sea ship by drones this past weekend. This is real stuff. I'm not making it up. Yet Wheat prices are still, on a relative basis, fairly weak, but they may be firming up here. Let's check in with, I had corn up here. I don't know why my charts did not save. Corn. Well, we have soybeans in front of us. Let's go with soybeans so we don't have to go looking for them later. A strong Friday on soybeans. This is a weekly chart. This is last week's candlestick. This could be a bear flag setup. Now, the reason why, folks, that we're looking to agriculture, we're looking to energies, not necessarily to buy them. What we're looking to do is get a feel for not what CNBC, not what Bloomberg, not what the Zero Hedge, not that anybody else wants to put in your mind in terms of the pressures of inflation on the U.S. consumer. All we need to do is check in here each Sunday night, take a look at the price action. We look at the prices and we judge for ourselves. We don't need CNBC to tell us if there's food inflation. We don't need CNBC to tell us if there is energy inflation. We have the charts. We rely upon the charts. So the charts are saying that soybean pressure, pricing pressure is beginning to strengthen up a little bit here. Will it last? Not quite sure. I'm skeptical of this chart. I think that it may break, but I wouldn't be surprised if it broke out. We're 50-50 on it. We don't have a hardcore opinion here. We're just doing a pulse check. That's it. Now, corn is down. Let's check out the weekly chart. We had broken out back here the week of the 10th. Now we're pulling back. We're doing a retest. I would say that the technicals of corn are more bullish than soybeans, more bullish than wheat as of now anyway. That doesn't mean that we're going to do a straight shot higher from here. All I'm saying is that what you have is an inverted head and shoulders setup. Left shoulder, head, right shoulder on a weekly time frame. If we break out above this upper band of resistance here, you'd better bet your bottom dollar that corn is going to be ripping through the ceiling. And I want to know about it. Let's take a quick peek at protein prices. Cattle and Fuego. Down on the session, but on the week, I mean, this is a monster chart. You have 40% less beef in the United States this year than you did last year. 40%. I believe I have hogs up here as well. My symbols didn't save. I apologize. I have to go looking for these. If I can't find it quickly, I will not waste time. Here we go. Lean hogs. Weekly chart. Not much happening here. We had a rally. We did break out. Expect to pull back to 80 on hogs. Retest and a possible continuation breakout. So a possible trade setting up, not this week, probably not next week. Mid-November, we'll revisit hogs. Okay, checking back in with the Dow Jones in the center here. This is now a 30-minute chart. We are still down on the session. We are off the lows of the session. Lower left, we're taking a look at the 10-year yield. The 10-year yield Back above a 4 handle, folks. Remember, last week we fell back down to below a 3 handle, and we're back above a 4 handle. This could be a problem for the markets, in particular technology. Also, if this continues, the dollar moving up higher, that could be a problem for not just small tech, not just mid tech, but large tech, because names like Microsoft, not this earnings period, the prior, as a matter of fact, they did mention it again, this earnings period, the dollar currency conversion is hurting their earnings. So a strong US dollar is not good for US exporters in general. The VIX is fairly tame. We'll talk about the VIX more in a moment. Let's go to comments. I know other people joined in here. Arena Idea Racing again. If you want to look at one later in a live stream, I've just been studying Akamai, nibbled a position a couple of quarters ago. We'll go over it. TZ Burton, hello, sir. Good evening, Bob, Chad. Happy Halloween. Yes, happy Halloween. Pat, the man, the myth, the legend. Welcome, Pat. I don't see Lewis on. Lewis, you on? You quiet. The yen was nuts last month. Yeah. That was an extreme oversold trade. We traded it once for a quick swing trade, and we got out. The options were not very liquid on the FXY is what we traded. So I didn't go back in. And at Crench, well, evening, folks. Evening to you, sir. And yes, folks, we have 37 people on here. Let's have 37 likes like that, please. It helps me out with the YouTube algorithm. Talon, another legend. Hello, sir. Welcome. And the gentleman that he is always, Franklin. Okay, we have no Seymour Rivers tonight. Very upsetting. I didn't get a sound check. That's disturbing. We forgive him. We love him. We tip our hat to him, probably having a cocktail with his family, enjoying Halloween Eve. Okay, let's get to it. Let's talk about valuations. We do this every Sunday. Oh, there he is. Your chat function is here. Let me just see if I can get Lewis he may be on the website watching. Let's see if we can get him the link. Well, I'm doing that, folks. If you don't forget to, if you're new to me, you haven't watched me before, my top 5 favorite candlestick patterns, a 5-part video tutorial below, free of charge. My gift to you. And let me send this over to Lewis. That way he gets that chat functionality. Lewis, you may want to try that link. That may help you out better. Okay, PE ratio. Oh, he just put another comment. I had a long conversation with Lewis the other day. Absolute gentleman, nice pace, easy to see the charts and follow you. Good. Thanks for the feedback, Lewis. A gentleman. We have PE ratio, Schiller PE ratio, 28 spots, 5.75. So, you know, when you look at where we were, well up into the 30s on the Schiller PE ratio, only a few short weeks ago, are we really all that much less expensive? No. Earnings were not great so far this quarter. You're seeing PEs stay stable with a bias to the upside. So earnings are not wonderful. So you're not seeing this new earnings season bring with it enough earnings to drive this number down anyway. It's stubborn. And this is one of the reasons why I don't believe that we're done going down yet. In the short term, I do believe that we're going to continue to move up higher. The Buffett indicator, we remain fairly valued. Approximately 27% extended beyond historical average right here in dotted line. We are here. So still a bit overvalued. Earnings coming up this week. Not much happening tomorrow. Tuesday, for you guys that like the small caps, SoFi, Pfizer, BP. BP is one of my top 5 favorite candlesticks going into the new trading week. If you didn't get my top 5 favorite trades going into the new trading week, it's on YouTube and on the blog as well, free of charge. BP is one of them. I would not initiate a new trade in front of earnings. Lilly's been on fire. Phillips 66. More energy stocks coming out after the close on Tuesday. AMD, Airbnb. Love both of those. We may be trading them. On Wednesday after the close, Qualcomm, one of our favorite earnings trades to play. Roku, a little bit speculative. Thursday, we own Cheniere Energy, symbol LNG. They report in the pre-market on Thursday. ConocoPhillips, more energy coming out. Big energy week this week, folks. Peabody Energy, another one. Some very speculative plays announcing on Thursday morning. Nikola, Peloton, Datadog. Royal Caribbean should be an interesting one. Thursday after the close. By the way, PayPal, from what I understand, has put that $2,500 fine back into their terms of service. Fact check me, but I did read about it and I heard about it as well, that $2,500 fee, which they said they took out of terms of service, is back in. Coinbase after the close. Block, which is Square. After the close Thursday, Twilio, that's one I like to trade. Carvana, I would avoid Carvana as a trade. Very, very speculative. Used car market is in a bubble, and the air is coming out of that bubble. Cloudflare, that's one we've traded on earnings, done very well with. Friday, DraftKings, I believe you have Penn National. Penn National comes out on Thursday, another gambling play. A lot of utility stocks announcing on Friday, along with Petrobras. That's a Brazilian energy play. Hershey's as well. Lots of earnings coming out this week, more tilted towards business services, more towards the consumer, more towards energy. Let's go to, all right, so we've been talking about the whys. I thought that the market was going to rally. Let's revisit the whys. There's only a few of them, but these are the ones that update rather quickly, and we could monitor on a minute-to-minute, hour-to-hour, day-to-day basis. One is the 10-year yield. I was doing market wraps, and I said to members, listen, we're going to rally up here to the highs of 2008 back here, 4.27. I said, we're going to go there, and it's probably going to be a pain trade getting up there. What happened? We were on our way up there, and then on several indexes, we broke the June lows. What did we do subsequent to that? Well, first we hit the 2008 highs, and then we saw a reversal bar off the lows on equities and a reversal on yields. Guess which came first? The reversal on yields, then equities went up higher. So you have a lot of resistance up here. So when do you get nervous about the market? You get nervous about the market if on a daily, on a weekly, on a monthly time frame, you close above 4.27 on the 10-year yield. Especially get afraid of technology or anything that's high beta, overpriced, or that can't roll over their debt. If they have a lot of debt, they have to refinance that debt. You got to worry about those plays because they need to refinance not at 1%, but at higher yields than what they currently have. Where does that money come from? Their earnings per share. The US dollar weekly chart. Remember what I just said here. The US dollar we need to watch out for, not just because of gold, not just because of the gold mining stocks or silver. It's bigger than that now. The dollar's gotten so strong that is hurting the multinational names like Microsoft, who does, I think they do about 55% of their business overseas outside the United States. That translation back into dollars from foreign currencies is hurting them. And it hurts a lot of multinationals as well. So a pullback in the US dollar is good for the multinationals. We got a pullback last week on the US dollar. In fact, a breakdown, what happened to the multinationals? They went like this. Now, what are we looking for here that will be the time where I say, listen, we're done here. We're done going down. I think what's going to happen is that I'll be coming on here one Sunday night, and we'll be taking a look at the Schiller PE ratio. We'll be taking a look at the Buffett indicator, and we will be on the Buffett indicator down below this historical trend line. And at the same time, you're going to have the VIX. This is a quarterly chart, a big macro high-level view. Quarterly chart of the VIX, the volatility index. This, for those folks that are not familiar, the VIX generally trades inversely of the S&P 500. So at current, this quarter, tomorrow finishes 1 month, the first month of the quarter, 2 months left to go. A lot can happen here. So at current, we have a bearish reversal bar on the quarter. But if we break out, if we put in a high above the highs of this quarter so far, which was at 33 on the VIX, get nervous. Get very, very nervous, because every single top in the equity market since the dot-com crisis has resulted in a minimum VIX of 45.74. The next bubble was the financial crisis, 89.53. I know many of you have heard me say this before. There are people out there that haven't heard me say it. There are people out there that need me to say it 10 more times so it sticks. They remember, they get that muscle memory. That way, when they see the VIX breaking out in the middle of the week, they're not members. They say, wait, whoa, whoa, whoa. That guy on Sunday night said, listen, 33 on the VIX. We're above 33. Hunker down, put a helmet on. I got problems. Better lighten up to the long side. Back here, COVID, we had RSI 85.47. Folks, the high of the year was in January on the VIX. It was only at 38, let's call it 39. We didn't even put in a 40 handle on the VIX this year, despite the fact that equities have taken it on the chin. And we've had a Federal Reserve raising interest rates at the fastest rate in U.S. history. Go figure. Let's talk a little bit about seasonality. This is brought to you by our partners over at TrendSpider. TrendSpider Automated Technical Analysis. You get the seasonality as well, 35% discount code below. This is a monthly view. We have one trading day left in October, which is up 69% of the times. Now we're going in. This is a 13-year view. We're going into November, which is up 83% of the time. December is up 75% of the time. So we're going into the most seasonally favorable period of the time, but there is a caveat. Let's do a deeper dive here. Let's go into a weekly view of the S&P 500. Now, the week we're going into is week 45. We're generally up 67% of the time. So odds favor bulls. Not as nearly as bullish as last week was. Seasonality, was it any surprise that last week's seasonality was up 85% of the times over the past 13 years? We dropped down a little bit this week, a little bit closer to 50-50, right? The following week is 50-50, is 50-50. So what happens during this period of time every single year? It's a Fed meeting. We have that this week. And you get the fallout from the Fed meeting. We'll go to that in a moment. In fact, we're going to go to it now. So October, we're going to get tomorrow's economic data, Chicago PMI. Don't expect much here. A lot of earnings coming out. Not tomorrow per se, but later in the week. But Chicago PMI, Purchasing Managers Index, the read at current is below 50. That is a sign of contraction. A read above 50 is a sign of expansion. So the Chicago PMI they're expecting a better read than the prior read. On Tuesday, day 1 of November, the S&P manufacturing PMI, important number, the manufacturing index just barely holding on to expansion on the borderline of neutral with a bias to the downside. Right now, the bias is to the expansion side. Job quits, that'll be interesting. That's literally what it means, of people quitting their jobs. Tuesday, this is the precursor to the Pimp Mac Daddy of all economic data. That is non-farm payrolls. So on Wednesday, we get ADP. This is their new revision to their way they calculate ADP. They've changed it. I think this is going to be the second report with the new calculation method. FOMC announcement on Wednesday. This is going to be important. It's always important. They're expected to go 3/4 of a basis point. The question is, where to from here? Thursday, initial jobless claims. We get them every week. The foreign trade deficit, that's been declining. The trade deficit's been declining. Productivity, very, very, very important. Productivity is extremely important to the U.S. economy. Expect a big focus on unit labor costs. The Federal Reserve wants to see them come in. In short, they want to see you poorer, but working more. They want to see more productivity, yet you making less. S&P Services PMI, that's already been a contraction. As I mentioned before, a read above 50 is expansion. Below 50 is a sign of contraction. We've been in contraction for several months because we're in recession. ISM Services coming out. A lot of economic data coming out this coming week. And on Friday, we get the Pimp Mac Daddy of them all, non-farm payrolls. Watch out for this here. They're going to talk about, this is average hourly earnings. Huge, huge, huge. Watch out for unemployment rate. This is kind of a joke. This is what you call the headline number. This doesn't calculate people that stop looking for work. So don't get lured into a false sense of security if this number drops down. Because if people stop looking for work, well, they're not counted anymore. And this does not count in people holding more than one job. If you want to get those people calculated in, go take a look at the U6 number. This is what you call the U3 number put out by the Bureau of Labor and Statistics. Do a Google search, it'll take you right over there. The U6 number is far more accurate when it comes down to actual unemployment in the United States. Folks, just joining in, if you could smash that like button, I really would appreciate it. Tell a friend, leave a comment. All right, so Fed to hike by 75 basis points, no great shock. The U.S. Federal Reserve will go for its fourth consecutive 75 basis point rate hike on November the 2nd. The expectation is that 86 of the 90 predicted policymakers would hike rates, blah, 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 blah. And one of the reasons being is fair. The unemployment rate is near pre-pandemic levels. They're worried about unemployment. Once you see unemployment rise up, that's when the fears of future rate hikes drop down. The front-end loading of Fed policy tightening will have seen up to now has been aimed at getting a positive real funds rate start in 2023, said Jan Groen, TD Securities, referring to inflation rates adjusted for inflation. Instead of a pivot, this is a fair point here. This is why I wanted to talk about this. Instead of a pivot, our view, the Fed is signaling that they foresee shifting of front-end loading up to December towards a mere grinding pace of hikes, then moving forward. What does that mean? It means that after the rate hike on the 2nd, you should expect to see rate hikes of roughly about 50 basis points per month moving forward until you see unemployment move up higher. They want to get basically more unemployment. That basically what they're doing is they're putting chemotherapy on the economy. So they're slowly killing the economy to try to kill inflation. The fear is that they're going to do something wrong, and I'll talk about that in a moment. I don't want to jump ahead of myself. Morgan Stanley, why inflation is likely to fall faster than most expect based upon M2 growth. A fair point. And I've fact checked this. They are accurate in their assertion here that M2 money supply, that is the currency in circulation, is dropping down. There's two ways of measuring that. CPI is coming down, yes. One of the primary reasons is M2 money supply is just about 2.5% on the year and falling fast. Here's their chart. If you take a look at this here, let me see if I could zoom in. Here's CPI in blue, and year over year, M2 money supply falling off of a cliff. And you can see they trade in tandem, right? But money supply will drop quicker than the CPI. So the CPI is beginning to wane a bit. Now, I did validate their data is accurate by going to the Fed's own website, pulling the data. Here's your double top on M2 money supply. And you can see on a 1-year view, we are moving lower. In fact, we have pretty much wiped out all of the money printing for 2022, which is good. That's a good thing. Now, here's what if inflation hits 8%? So I thought this is interesting. Larry Summers, on a political basis, I don't agree with him. But as it comes down to being an economist, Larry Summers is, a far left guy. There's no question that I'm more moderate to right leaning, but that doesn't mean I don't listen to intelligent people. Larry Summers happens to be an intelligent guy. So what Larry Summers is concerned about, and I share his concern, is that we're headed down the road of the Arthur Burns method of fighting inflation. Who is Arthur Burns? Okay, back in the early 1970s, when inflation really began to hit with the Arab oil embargo, it wasn't Paul Volcker that was the Fed chairman. It was Arthur Burns. Now, Arthur Burns initially fought the good fight with inflation. It began to come down, but as it began to come down, what did he do? He pivoted and he began to cut rates. What happened to inflation? Right back up again. So that's what Powell is concerned about at current. And what Larry Summers is worried about here is that you're going to get a 2.0 of Burns and not a 2.0 of Volcker. So right now, Powell is doing Paul Volcker, who was just ruthless because he was given the political mandate to fight inflation, do what it takes. Reagan had his back. One argument that I have with Donald Trump is that in 2018, when Powell was fighting inflation and the economy began to slow down, it was Donald Trump that said, hey, listen, start cutting rates. Powell's problem is that he listened. If he wouldn't have listened back then, and we probably wouldn't be in the mess that we're in now, or else the mess that we would be now would be a lot less than what it were if Powell truly acted as independently as he says he is. They're really not. That's the problem. He blinked. So really quick, almost never does high inflation come down fast. Today's consensus view that inflation will come way down is the figure that Jim Reed, this is not what I really wanted to read. In short, I gave it to you. He's worried about Powell doing a pivot way too early. While you're going to get a stock market that rips up higher very, very quickly, if inflation rips up higher as well, they're going to channel Paul Volcker. If another Paul Volcker needs to come in here, you're not going to want to be long of stocks or housing or anything else for that matter, except for gold. Concerns about, we talked about this a little bit before. The cure for high prices is higher prices. Now, with the type of headline coming out like this, record high, 75% of winter wheat suffers from drought. Okay. So what's wheat doing in light of this news? On the month, it's down 6.5%. So do I believe the headlines or do I believe prices? I believe the prices. That's why we use charts. All right. So I want to segue now over and into a trade that we're looking to put on for the new trading week, and that is our trade of Amazon. Now, Amazon is one of the top 5 charts that I went over going into the new trading week. If you're not familiar, I did best stock charts. It's posted on the website and on YouTube. Go check it out. So here is Amazon. A really quick update. Why am I bearish? Despite the fact that it rallied off the lows of the session on Friday, and the S&P 500 is very bullish. It's a seasonal period of time. I look at the charts, and the charts flash an outside reversal bar. We held one support level. We failed to hold another one. Volume to the downside was very heavy. This is a stock that's trading with a PE of 103, maybe less now, but still very, very expensive with ever slimming margins, especially in their overseas business. So I think Amazon is going to move lower. So what's the trade? I want to put on a trade that, if I can get my mouse to work here. Come on, mousey. This is what you call a why am I getting this? Close. There we go. That's better. Okay. We want to do an Amazon ratio strangle. So this is a trade that we would expect to get on a typical strangle. What's a strangle? Okay. Let's define what a strangle is. A strangle is when you sell, very, very basic, sell one call at the same time you sell one put. Same expiration date. And what we're looking for here is an expiration date going out 47 days to expiration, DTE. The strike is the December 16th strike. We expect to make on this trade, if we hold to expiration, 8.6%. Now, it doesn't sound like a lot of money, does it? But for 30 days, that's a lot of money. You multiply that times 12, you're dealing with a lot of money. But to hold it to expiration requires a lot more risk. And you're not getting paid for all that much risk. The longer you hold an option towards expiration, the greater your risk of your strikes being challenged. And let's take a step back first. We don't plan on buying these options. We want to be the banker. We want to be the casino. We do not want to buy the option. We want to sell the option. I'm going to go to the reason why we selected Amazon in a moment. We're not there yet. So our game plan here with Amazon is to hold it to either A, 50% profit, which is a 4.3% return on capital, and or 21 days, which should get us roughly a 50% profit or a 4.3% return on capital. Pretty good. You do that every month, you're making real solid cash flow. But that is a typical strangle. I'm bearish on Amazon, so I want to put on what you call a ratio strangle. It's pretty much the same thing. Same expiration date, same probability of profit, POP, probability of profit, 70%, not bad. That's what you get when you're a premium seller. You don't get that type of odds when you're a premium buyer. So in this scenario here, we're going to collect less in terms of a percentage gain if we hold it to expiration, but we collect more premium, $373 versus $266 for your standard strangle. What's the difference between the two? Simple. I sell twice as many calls than I do puts, right? So if I sell a call, that means I am bearish on the stock. I want the stock to go down. If I'm bullish on the trade, I want to sell more puts and I want to lighten up on calls. if that makes sense. If you have a question, I'll stop. Ask your question. I indulge you to please do so. So again, we are selling premium here. We ideally don't want the stock to do anything. We want it to expire worthless. If TrendSpider between now and December the 16th, that's great. Option buyers don't have that luxury. They need the stock to move. Let's talk about the trade. So let's bring up Thinkorswim and go to why do we like Amazon? And in reality, you can apply this to Google. What we're looking for here are, this screen here shows me expensive options on a relative basis. Relative to their past 12 months, are the options expensive? I only want to sell options where I get above average premium because I'm looking for IV crush, implied volatility crush. So I'm looking for an IV percentile on a stock that is not going into earnings and has an IV percentile above 50. Above 50 makes it expensive on a historical basis. So let's scroll down. What stocks do we have to choose from? Google's one. We may choose Google. But in this case, we're going to select Amazon. Why? I hate the chart. So let's go to Amazon. Amazon, does it fit our criteria on the trade platform? Yes, it does. %54 current IV percentile. So what's the trade here? Here it is. I already have it laid out. We're going to sell to open. This is the ratio. 2 contracts. Amazon, December 16 calls simultaneously. We're going to sell to open 1 contract. Amazon, 16 calls. The strike price to the call side, 122. I'll show you what that looks like in a moment. And to the put side, an 88 put. That'll generate us a premium of $3.73. And you can see you multiply that times the minimum of 100 shares, 1 contract. That brings you into your account, deposited into your account, $373. Not bad. So what's the probability of profit here? We kind of already went over that, but let's visualize it. Here is December the 16th. We're using a probability ratio of around 70%. We're selling the 122s. There's a probability of 85% that these shares will trade below 122 by expiration on December the 16th. There is also a 85% probability that these shares will trade above $86, right? That's what we had it. $88 on the 16th of December. So the probabilities favor us dramatically. So this is the trade that we're looking to put on, and you can adjust this if you're neutral on the trade. You really don't have a bias one way or the other. Suppose that Amazon met earnings expectations. They really didn't do much after earnings, didn't break down. Well, I would just change this. I would just sell 1 put, 1 call it a day. You're going to collect less premium. Now that premium is only $266. If you're going to trade 10 contracts, sorry about that noise. If you're going to trade 10 contracts, well, you multiply that times 10. That's a trade on Amazon. Let's do some chart requests. If you have any questions, let me know. Yes, PayPal put it back. They did put it back in, huh? Good. I'm glad we got a fact check. Don Bongino, big fan. Don Bongino has parallel economy payment. Yes, I read about that. You just type in parallel economy. Yes. Seymour Rivers. Thank you, sir. Pat, IBM has been so strong since reporting earnings. Yes, it has been. Just turned inbound. Oh, on a wonderful road trip now. Enjoy. I love road trips. Nat gas. We could do nat gas. Sure. Pat, you want us to take a look at IBM for you? Let me write these down before I forget. UNG. We're going to go over Akamai. We're going to go over Snap, pins. 2 requests for pins. We're going to leave it off at that. INMD. TF Hatter. Bobby, have you ever traded SVIX? No, I don't like those VIX instruments. No, I to answer your question, yes. I stopped trading them because there's a lot of time decay in those instruments. So I was trading, I forget what the symbol was, but the VIX would be up one day, the instrument would be down. It just drove me crazy, and I got out of it. I swore I would never trade them again. Snow. Okay, we're going to leave that off. Oh, IEP for Tim. I'm such a sucker. IEP, Snow. All right, we got him. We're going over UNG, Akamai, Snap, LABU, Pins, INMD, IEP, and Snow. Let's do it. Folks, again, we're going to be using TrendSpider, 35% discount code below. Help support the channel by using an awesome, awesome product. I only support awesome products, and this is the only one I support. All right, UNG. All right, so for disclosure purposes, we are long of Boyle, leverage ETF, putting you long of natural gas. We'll use UNG as our proxy, less volatility, less volume skew. So this is a weekly chart. We bounced off a support last week. We do have another support level down at 17.18. I think this is a 20-period moving average. Oh, that's a 200-period moving average. No, we had a 2 in there, 2 and a 0. 200-period moving average, which is pretty much flatlined. Volume was good last week. Let's go to a daily view. So before we leave this chart, a couple of things to point out that have me kind of discouraged about natural gas. Right? It's this. After putting in a higher high in August and then pulling back, unfortunately, we broke down below the lows of June. That I don't feel comfortable with. So are we back above this now? Yeah, we closed back above it. You know, it's a commodity. It's very volatile. So we'll give it a pass here. But if we break back down to new lower lows, I have a position in natural gas. I got to stop out. If we break down below the lows of the week of the 17th, got to get out, because that would mean a continuation breakdown. So we're going to give it a pass for now. Now on a daily chart, we're holding the lower band of support. What I want to know, this is an automated trend line. This is the value of TrendSpider. Take them off, put them back on. You can see down here is your lower band of support, the downtrend channel in green. This is my drawing here, implying that we have support immediately below. And the algorithm's picking up a resistance level immediately above. I want to know when we break out. I don't want any sensitivity. I only care about a close above this breakout point. Thank you, Lewis. UNG. There's our buy signal. We break out above that resistance level. It's game on to the long side. and we'll keep this active 14 days. We're good to go. Set it and forget it. That is over here. In fact, what I want to do is I want to take a look at seasonality. There's the alert. Let's check out seasonality. Going into the new trading week, not a great week. We're up 58% of the times. I'll warn that the week following this week is up only, this is 13 years, up only 42% of the times. And on a month-to-month view, this is not a great time seasonally to be long of natural gas. But one thing I want to point out is that this is kind of skewed in a way, and this is not to rationalize away natural gas. And the reason we need to keep in mind that this is skewed is because when you go back and you take a look at a monthly chart of natural gas, you got to remember we were in a long-term downtrend channel on natural gas. In fact, let me bring it up here. Quarterly view. You could see that we've been in a bear market since 2008 on natural gas. It was only up until this year where we ultimately broke out of this downtrend channel on natural gas. So we need to put things into perspective, right? The vast majority of the time on that historical chart showing seasonality, we were in a bear market. Now we're converting into a possible bull market. You could argue that we are now in a bull market because we put in higher lows. We now have higher highs. I'm going to say we're at the precipice. I'm going to be a Johnny. I'm going to be very, very impartial here. Okay, so natural gas looking good. We only want to buy it on a breakout. Take this off, make some more room. Okay. What are we looking at next? Akamai. Monthly chart is a problem. Monthly chart's a problem. The month is going to close tomorrow. The problem with this chart is that we broke down the month of September down below critical support on a monthly time frame. That's nothing to sneeze at. So we have retraced up and into the prior support level. It's now acting as resistance on Akamai. So for me to get excited about this month is that we need to break out above this resistance level next month or tomorrow, which I doubt, but you never know. But many times this is what you call a retest, right? People can't believe the breakdown. They think they're getting a bargain. They can't believe that the stock is breaking down any further. What do? They drift it back up into resistance. Who's at that resistance levels? Not buyers, but sellers now. I know I spelled that wrong. We'll let it be. So if we close out the month tomorrow or next month, we close out a week above this current resistance level, then I would get excited about Akamai. Now, maybe the weekly chart, maybe the daily chart will have a little bit of influence. Let's take a look at a weekly chart. In fact, I'm going to overlay on top of the weekly chart monthly resistance. And you can see there's our resistance immediately above. Let's call it $90.65. Where do we close? 89.21. So from a swing trade perspective, you have far too much risk, not enough reward to put this trade on. Daily chart, it looks good. I mean, what you're doing on a daily chart here, you're certainly stair-stepping higher. There's one stair step. There's two stair steps. Here's a third stair step. The problem is, again, the time to have bought this stock was on a recapture of support down here. Again, this is the automated trend line, the algorithm. Take it off, put it back on right here. If you had an alert set, let's overlay the monthly resistance on top. Let's highlight it. So I wouldn't buy this stock here. I'm not saying it can't move up higher, but your risk reward, the horse has left the barn, right? The horse has left the stable. You should have already been in this to the long side. If you pull back to a support level and you want to look to open up a position, okay, maybe you want to look to sell puts and sell a put, assuming that your premium is worth the risk. Sell a put at support, maybe down here at $84 a share. Going out 14 days, 30 days, and average your basis cost down. That's one way to play this and not having to chase it yet. You're still long on the stock, if that makes sense. Because even if it doesn't come down to $84 and get put to you, well, at least you're generating cash flow off of the options trade. You are welcome, Donnie. Snapchat. Weekly chart. Horrible earnings report. But remember, the stock market is a forward-looking mechanism. We had an inside bar last week. No new. Now, this is what would make me nervous about Amazon. I just went over the Amazon trade. If you're just stepping in, go back, watch for the Amazon trade. What if Amazon doesn't break down to new weekly lower lows next week? Do you think I'm going to be putting on a bear buyer's spread on this? No, it'll be a neutral strangle, not a ratio strangle. So last week we did not get followed through to the downside on Snapchat. In fact, we had an inside bar. So what this sets Snapchat up for is the potential for a head and shoulders setup. You already have an inverted head and shoulders setup, meaning an upside down head and shoulders setup. Here's your left shoulder. Here's the beginning of a potential head. Then you want to see a right shoulder form and then a breakout above the neckline. And the neckline would be right around here. We'll keep this active for a while. And we're good to go. So this is a stock where I wouldn't short it. It's definitely not a short. I would watch it. It's simple as that. If you want to trade options on it, trade options on it. Sell premium. Be neutral. I wouldn't be directional with it. I wouldn't go aggressively long right now. That's one thing I definitely wouldn't do. Let's take a look at a daily chart, see if we have a swing trade here. We broke out on Friday. I would watch for a retest of support on Monday, Tuesday, Wednesday, whenever. Keep a little bit of sensitivity on. And I would get long for a swing trade. And I would look to trade it up to here, $10.80. It's not much risk reward, to be honest with you. I mean, not much reward for the risk. So not loving the trade, to be honest with you. LABU, we own this. I went over this, 5 top favorite candlestick patterns. There's only one chart you really need to look at here. That's the weekly chart. The weekly chart recaptured support last week. We broke out. You have RSI putting in higher lows with a double bottom setup and a breakout. Stokes hooking up. LABU buy longer term. Very volatile, not for the faint of heart. Pins, 2 requests for pins. Pinterest, high beta play here. Weekly view, not bad looking, not bad at all. Last week we had a breakout. How do we know there's a breakout? Simple. Take your crayon out. Draw, I screwed that up. Draw a trend line. And there you have it. There's your breakout. What's the trade here? There are 2. Step 1, if we do a retest of the breakout point, I would nibble. What else would I do? Well, we have a volume shelf immediately above here, right here at $26.40 per share. I would add more to the trade on a breakout and only a close above the breakout, not an intraday trade above. What's the price I said again? 26.40. It's got to close above that mark. So at 3:55 Eastern Standard Time, it's got to be trading above 26.40 again. There we go. There we go. Our alerts are set. Again, right here. Here are all the alerts. That we have set tonight and all the other ones that we have set. Okay, moving on. Let's take a look at a daily chart out of curiosity. Oh, big gap up. Don't buy this stock on, please do not buy this stock tomorrow morning. It gapped up and into resistance. You got to wait for that retrace. Wait for the retrace. It'll happen. Show patience. You have, this is the value of the automated trend lines, folks. I didn't draw this line. Or did I? Why is this not coming off? I guess maybe I did. I guess I did. I don't remember doing it. But okay. I did. Pretty good. All right. So I haven't gone over this chart in a long time. I must have did it a while ago. So resistance immediately above. You can see a bit of a topping tail on Friday. Those are sellers waiting to get made whole. Don't go buying Monday morning. Wait for the retrace. What else do we have? INMD. Daily chart, interesting, but we're not ready for the daily chart. We want to do multi-time frame analysis. We want to identify where the stock has been to appreciate where it might be going. Where has it been? It's been in a big bear market. What's it doing at current? Well, higher lows. Let's take our crayon out. All right, so I wouldn't buy this here yet. It's clear that we have a lot of topping tails on top of these candlesticks. I would wait for the breakout. You know, it may sound crazy. Oh, you want to pay more for a stock? Yeah, I do. Because if I pay a premium for the stock, that means that my probabilities of that stock are going up higher because we broke through resistance are considerably greater than paying less for a stock and increasing the probability of me stopping out of the stock. So sometimes it's worth the wait to pay a few dimes more for the probability of more upside potential. INMD. Can't spell tonight. Long entry. We are good to go here. Another thing I want to point out on this chart is that your momentum indicators all putting in higher lows, but RSI is not just putting in higher lows, it's also putting in higher highs. Significant. Stochastics, another momentum indicator, higher lows. Now we're looking for higher highs. Bullish weekly chart. Daily chart, same deal. You got to wait for the breakout on INMD, and that breakout point resistance level is at around 37.25 on INMD. I think I keep saying IMDb. That's Internet Movie Database. INMD. Last one. IEP. IEP. We went over this one last week, I think, if memory serves me. And we were bullish on it, and it did move up higher. The horses left the stable here. You're going to have resistance right up here, as noted by automated trend lines. Okay? They're your friend. Trust me. So I would not go buying this stock. You're going to have resistance immediately above. If you pull back, you retrace back down to $54 a share, you could reload there. But as we hit these resistance levels in blue and red, I'd be looking to scale out, book some profits, make them real. Daily chart. Nice daily chart here. It's implying that we're going to get another move up higher tomorrow. But again, you want to take note of where you have resistance above, right? So what I just did, these dashed lines are weekly resistance on top of a daily chart. So this is why you need to use multi-time frame analysis, not just a daily chart, but a weekly chart, a monthly chart. It keeps you out of trouble. So I would not buy this. If they gap it up, they're going to gap it up right into a bunch of sellers. Beware, beware. SNOW. Typo, Bob. Typo. Go to the weekly chart. I don't like this one. Looks like we have a head and shoulders setup forming here. I think they reported already, didn't they? So these arrows here imply that we have some shoulders. It doesn't mean that we're going to break the neckline here, but it's ominous. I don't like the weekly chart. And plus, last week was an outside reversal bar, also known as a bearish engulfing. Again, one of my top 5 favorite candlestick patterns. 5-part video tutorial below, free of charge. Take advantage of it. Daily chart. You want to buy it, you're going to use a tight stop on it, fine. But we bounced off of support. Stokes are rolling over. I don't like this. I don't like this chart. There's way too many other good stocks out there to buy right now than Snow. I would avoid this one until it shows strength. If it shows strength and it negates the weekly head and shoulders setup, what might that look like? Like this. We tried to do it last week, but it was rejected. So if we close above resistance, I'll throw you out a number, in fact. We close above 185.38 on Snow, then you want to look at it as a potential long. Until then, avoid. Let's go to some comments. Donnie again, you're very welcome. Hi, Bob. Please do BA if you have a quick sec. Last one, we'll do BA. BA kind of hurt me last week. Not that I'm long or short of it, but LMT, which I had an options trade on, went against me, and BA kind of helped that situation worse. BA is looking, let's go to, yeah, this is a weekly chart. I like the setup here, W formation. Let's go to a monthly chart. I think this could be bought. Use a stop loss right below the month's lows. If it breaks that support level, get out. But if this plays out, this is a monster W formation or a double bottom setup. And if we break out and above 259, you're going a lot higher here. So I think this is a great area in which to buy a few shares, throw them in your long-term portfolio, and sit, watch, and wait. But I would use a stop loss because this stock just continually shoots itself in the foot. So I like Boeing here. I think it's a buy. Randy, I think natural gas futures looking good right now. Your words to God's ears. Thank you, Randy. AAL had good earnings, but they are giving huge raises, keeping the stock under pressure. I think there's a talent shortage there. Franklin, you're very welcome, sir. I'll talk to you tomorrow. The lovely Jody. Hello, Jody. Tim, you're very welcome, Tim. Donnie, why be in LABU if the volatility is so high? Is it a seasonality play? No, it could be a seasonality play. I like the volatility because we sell premium, and we'll sell covered calls, we'll sell puts. So I like the volatility, but you need to be that type of a personality that can handle that, and that's okay if a person's not. I understand it completely. Seasonality wise, this only goes back 4 years. We have to have more data than this, no? I thought it was trading this for longer than 4 years. Yeah, this goes back further. Going back 7 years, not a lot of data here. November up 67% of the time. But keep in mind, it's only 7 years. So to be fair. So yeah, I like LABU. Bob, for Boeing, did you mean 259 or 159? Well, I was looking at a massive monthly chart on BA. So let's go back to it. So look at this monster. This goes back to January of 2020. So we rallied off the lows of 119.47 up to a peak of the high was 278.57. Then we retraced all the way back down. I'm not saying to wait until then. I'm drawing the illustration that we have a probable double bottom setup here. And if and when we get up to these pivot points, 263, especially 278, we clear those resistance levels, we're going to come up here in a heartbeat. So you want to be a part of the climb the wall of worry crowd. Remember what I just said, right? I just sent you out a narrative, right? A lot of people heard that narrative and automatically probably just said, nah, I'll wait. But that's my narrative. I don't know anything, to be honest with you. All I know is the headlines that have come out. Those are in the past. I'm not in the boardroom. So what you're going to see priced in here are insider buying, institutional buying, BlackRock, Vanguard, because they all own this stock. They know. And once you see those institutions accumulating and people dumping once they get made whole, well before these highs seen back in 2021, you want to have a position in advance of that, because I'm talking to you about old news. That's old news. It's dead. It's like talking about Chipotle Mexican Grill when they had salmonella problems. That's long gone. So look at Chipotle now. So this could be the bottom for Boeing. I think it's worth throwing a few shares into your long-term portfolio and getting ready for the next business cycle. TZ Burton, you're welcome, sir. Thank you for being here very much. Talon, good night, sir. Westerlaw, good night, folks. Thanks everybody for being here. I'm humbled by you being here and spending your Sunday night. If I could ask you to smash the like button, subscribe. TrendSpider 35% discount code. Join the Contrarian Trader. Get our trade alerts. 35% discount code on TrendSpider means nothing. I give it away free to our silver and gold level members with a 14-day free trial offer. Everybody have an awesome trading week, a profitable trading week. I'll talk to you soon. Be well.